Kevin O'Leary says your 5 latte is the reason you're not a millionaire. That you're too lazy, too distracted, too small-minded to make it in the big leagues. That if you just clipped coupons, skipped avocado toast, and tucked away every nickel, one day you'd wake up rich. Here's the brutal truth in 2026. That advice is not just outdated, it's dangerous. Because saving pennies won't make you rich. It will make you frustrated. It will make you feel like you're hustling. But in reality, you're just running on a hamster wheel of mediocrity. If you're still broke, it's not the coffee, it's the strategy. And the strategy most people are using is exactly what keeps them broke. The small savings, slow grind, wait 40-year strategy. They think wealth is about scraping by, when in reality, wealth is about deploying capital intelligently, ruthlessly, and strategically. Here's the question you need to ask yourself. If $100 was all you had today, nothing more, nothing less, could you turn it into $1,000? $10,000, $100,000. Most people fail that test before they even start, not because they're unlucky, not because the system is rigged, but because they treat money like a piggy bank instead of a weapon. Let me make this perfectly clear. You don't become wealthy by clipping coupons. You become wealthy by understanding the system, exploiting opportunities, and making calculated bets where the odds are stacked in your favor. That first $100 you invest correctly is not just money, it's a signal. It tells the universe you're serious. It tells the market that you're a predator, not prey. And here's the kicker. Most people fail because they confuse idea with execution. They think having a bright idea makes them special. But here's the brutal truth. 95% of ideas are trash, flat out worthless, doomed to fail trash. And the reason you're broke isn't because you lack ideas. It's because you lack the filter to separate the 5% that actually have teeth from the 95% that will eat you alive. In the next 25 minutes, I'm going to show you exactly how to spot that 5%. How to flip $100 into a fortune. How to stop wasting energy on ideas that will die before they see daylight. And how to finally stop blaming coffee, convenience, or circumstance and start blaming yourself for not thinking like a shark. Because here's the harsh reality. If you can't survive the first test, you'll never survive the market. And if you think saving $5 a day is the key to freedom, you're already behind. The first step to real wealth isn't saving, it's hunting. Kevin O'Leary, Mr. Wonderful himself, loves to tell you that every dollar you spend is a dollar lost. That if you skip the latte, the avocado toast, the weekend splurge, you're somehow building your empire. Sounds logical, right? Except it's a trap, a shiny, celebrity-shaped trap. Because here's the reality most people don't see. Kevin is speaking from the perspective of a multi-millionaire. He didn't become rich by obsessing over $5. He became rich by leveraging hundreds, thousands, millions of dollars by making investments that multiplied, not by cutting out small pleasures. When he tells you to save, what he's really doing is planting a scarcity mindset in your head. Scarcity is the enemy of wealth. Scarcity makes you risk-averse, scared of opportunity, terrified of losing the tiny sum you've worked to hoard. It teaches you to be responsible with $1 while ignoring the potential of hundreds or thousands. Being cheap is not an investment strategy. You can hoard $100 in a jar, hide it under your mattress, or squirrel it away in a low-interest savings account. By December 2026, inflation will have eaten most of it. You won't be $100 richer. You'll be slightly poorer in purchasing power. And if you think the solution is save more, congratulations, you've just doubled down on futility. The rich don't just save, they multiply. They take capital, deploy it in ventures, in startups, in markets, in assets that actually generate returns, and then reinvest those returns aggressively. They don't count pennies, they count opportunities. They don't wait for wealth to trickle and they hunt it. Here's the brutal takeaway. Following celebrity advice without context is a financial death sentence. Mr. Wonderful's clip coupons mantra might work if you already have 7 figures to start with, because then every dollar saved can actually compound into something meaningful. But for someone starting with nothing or $100, it's pure poison. And yet every day, millions of aspiring entrepreneurs are paralyzed by the same false logic. If I just stop spending, eventually I'll be rich. No. Stop lying to yourself. Stop thinking like a broke person trying to act rich. Wealth starts with understanding leverage, risk, and multiplication. The moment you stop focusing on these, your financial potential dies before it even has a chance to grow. So yes, Kevin O'Leary might have millions, but you can't afford his advice. Not yet. If you follow it, you're setting yourself up to stay stuck, scared, and broke while the market and other people with real strategy eats you alive. Here's why you're still poor. Not because the system is rigged. Not because you were unlucky. And definitely not because you drink lattes. You're poor because you think like a poor person. Let me break it down for you. Greedy poor people spend $100 on a pair of shoes that are going to be worth $10 in 2 years. They feel good buying it today. They post it on Instagram. They tell themselves, I deserve this. Meanwhile, that $100 is gone, no return. No compounding. Nothing to show for it except temporary satisfaction and a lighter wallet. Now, watch the mere rich people spend $100 very differently. That same $100 becomes an asset. Maybe it buys fractional shares of a dividend stock, a digital course that teaches them a marketable skill, or seed capital for a micro business. That $100 doesn't just sit there, it works. It multiplies. 6 months later, it's $120. A year later, $150. And if they reinvest, $200, $400, $1,000. You see the difference. This is the brutal mindset shift you need. Wealth isn't about how hard you save, it's about where you deploy. Poor people are waiting for enough money to start. They think they need $500, $1,000, $10,000 before they can invest or build something meaningful. That's a lie. The moment you understand leverage, $100 is all you need. That's your starting pistol. That's your entry ticket. That's the moment you separate yourself from the herd. Think about it. If you start with $100 today and you know how to multiply it, just multiply it intelligently, you're creating momentum. Momentum grows faster than discipline. Discipline keeps you clipping coupons. Momentum makes money work for you while you sleep. Poor people grind. Rich people leverage. One burns energy, the other burns cash, but in a way that grows exponentially. Here's the harsh truth. Your biggest enemy is not the economy. It's not your boss, it's your brain. It's your habits. It's the constant small decisions that add up to zero. You buy shoes instead of assets. You upgrade your phone instead of upgrading your skill set. You spend on temporary comfort instead of long-term freedom. And when December comes, you wonder why your $100 didn't turn into anything. And yes, it's uncomfortable. Rich people think differently. They see the $100 not as money to spend, but as a tool, a weapon, a seed. They understand delayed gratification in its purest form, not the boring skip the coffee kind, but the strategic put this capital to work and let it crush returns kind. That's the mindset that separates the 5% from the 95%. So here's your warning. Stop waiting for enough money. Stop thinking that you need to be rich to invest. Stop following celebrity advice that makes saving a fetish instead of a strategy. Start with what you have. $100 is enough. If you deploy it correctly, it will grow. If you do nothing, it will evaporate like it always does. Poor people watch life happen. Rich people make life happen. Poor people follow advice from people with 7-figure bank accounts. Rich people create advice from experience and act on it. The question is simple. Which one are you? Which $100 are you going to spend today? One on shoes that die in 2 years, or one on an asset that keeps giving back for decades? Listen carefully, because this is where most people fail. Everyone talks about investing. Everyone claims they'll start next month or wait until they have enough. Meanwhile, the market moves, opportunities die, and your excuses compound faster than interest. If you have $100 today, I don't want you wasting it, not on shoes, not on gadgets, not on the save $5 a day nonsense. I want you to deploy it strategically like a predator in the wild. Every dollar should have a job. Every dollar should either protect, multiply, or educate. And here's the blueprint for 2026. Step 1, $40 into index funds or ETFs. The safe base, this is your foundation. Your $40 buys fractional shares of a diversified ETF like VO or VTI. Why? Because the safest way to ensure growth over time is to mirror the market. The S&P 500 has returned roughly 10% per year over the last 30 years. That's not hype, that's history. Here's the brutal truth: you can't predict which company will explode, but you can bet on the engine of capitalism itself. Every time a tech company rises, a retail company collapses, or an energy giant tanks, the index smooths it out. You're not gambling. You're compounding. That $40 isn't just money sitting in an account. It's your baseline. Without it, your riskier bets are just reckless. Fractional shares are critical. You don't need $1,000 to start investing in the market. With apps that allow fractions, $40 buys you a slice of everything. This is your safe base. It won't make you a billionaire overnight, but it protects you from catastrophic mistakes and allows your other investments to play with leverage. Step 2, $30 into 2026 tech AI. The multiplier now, here's where the fun begins. $30 goes into the future. Tech, AI, and companies that are shaping the world you'll live in. Think of it as placing your bets on tomorrow's winners. Look at OpenAI, NVIDIA, or smaller AI innovators making tools for business automation, healthcare, or climate solutions. Even fractional shares can make a difference. $30 isn't just money. It's an early stake in the companies building the next decade. The math is simple. If one of your picks rises 5 times over the next 2 to 3 years, that $30 becomes $150. That's leverage. That's exponential growth. And yes, it's riskier than the index. Some bets will fail. Most bets, in fact. But the beauty is that you already have your safe base protecting you. This is how you separate yourself from the herd. Calculated risk, not blind speculation. Here's the brutal reality most people ignore. The majority of wealth in the 21st century will be created in tech, AI, biotech, and automation. By 2030, companies that dominate AI could account for trillions in market cap. $30 today could turn into the capital you need to reinvest in your own business or future ventures. Step 3, $30 into self-education, the ultimate ROI stop. Listen carefully. The highest return on investment in 2026 isn't crypto. It isn't a hot stock. It isn't a side hustle that you half-ass. It's your own skill. Buy a book. Buy a specialized tool. Buy a course that teaches you coding, AI implementation, data analysis, investing strategy, or marketing. Even a $30 ebook, if applied properly, can generate returns exponentially higher than any market investment. Why? Because skills are leverage. Knowledge compounds faster than money. A single insight from a book, a single skill learned in a course, can lead to side hustles, freelance gigs, or business ideas that bring in $500, $10,000. And unlike stocks, your skills don't die in a market crash. They don't vanish overnight. They are portable, reusable, and under your control. Here's the kicker. Poor people spend $30 on entertainment. Rich people spend $30 to upgrade their brain. There's no debate. Every dollar you invest in yourself today increases your earning potential tomorrow. Skills don't just create money. They create options, freedom, and leverage that the market can't take away. Step 4. Execution is everything. This isn't theoretical. This is action. Split your $140 index. $30 tech. $30 self-education. Set it up today. Don't wait. Don't overthink. If you delay, the opportunity cost compounds faster than your fear. Track it. Monitor your tech bets. Reinvest dividends from the index fund. Apply what you learned from your education immediately. That's the difference between passive hope and aggressive action. The poor hope. The rich execute. And here's the truth. Most people will never do this. Most people will scroll TikTok, complain about the system, and wait until they have enough money. You're smarter than that. You're willing to start small, act fast, and compound early. That $100 is not just a starting point. It's your first weapon in the war for financial freedom. Step 5. Compounding over time. Let's run the numbers aggressively. Your $40 index fund grows 10% annually. In 5 years, it's roughly $64. Your $30 tech investment, if even one pick 3 times, becomes $90. Your $30 self-education, if applied successfully, could generate thousands in additional income. That's the difference between stagnation and momentum. Momentum beats discipline every single time. The sooner you start, the faster you create leverage. And leverage is the only way to escape mediocrity in 2026. With it, your $100 disappears, eaten by inflation, poor decisions, and time wasted. With it, $100 can become the foundation of a real fortune. Step 6, the Shark Tank filter finally. Here's the brutal Kevinomics truth. 95% of ideas fail. But if you apply this 100 blueprint, you're filtering for the 5% that survive. Every index investment is low risk. Every tech investment is high upside. Every dollar in education multiplies your ability to spot the next opportunity. That's the filter. That's how the rich think. That's how you start building a fortress with $100 while others waste $1,000 blindly. The poor waste money. The rich deploy money. The smartest people combine money and skill. That's the blueprint for 2026. Do it correctly. Do it aggressively. And watch that first $100 turn into a financial engine you never thought possible. Let's be brutally honest, most people are broke because they spend money on nonsense. Stuff that looks good today and bankrupts you tomorrow. In 2026, you have to be ruthless with what you buy. Here are 3 things you must avoid like the plague if you want to build real wealth. Number 1, fast fashion and hype clothes. You think a 200 sneaker is an investment? Think again. Those shoes lose 90% of their value the moment you step outside the store. Instagram likes won't pay your rent, and trend-driven hype clothes will never pay dividends. Every dollar you waste on chasing fashion is a dollar that could have been deployed into an asset, something that appreciates, generates cash flow, or improves your skills. Stop fooling yourself with temporary status symbols. The world doesn't care what you wore last week, but the market will care about the capital you invested yesterday. Want to look wealthy in 2026? Invest like the wealthy, not dress like them. Number 2, new cars on debt. This is the classic trap. People think, I need a new car to succeed. Wrong. When you buy a car on a loan, you're signing up for decades of interest, depreciation, and stress. That $30,000 car, by the time you pay it off, it's worth $15,000 if you're lucky. And the bank already got the rest. Debt masquerading as luxury is a wealth killer. Every dollar that goes into financing a depreciating asset is a dollar. That could have been multiplying in the market or invested in yourself. The rich drive used cars, lease strategically, or pay cash because they understand that money must be deployed, not drained. Number 3, get-rich-quick crypto schemes. Listen carefully. Not all crypto is bad. Bitcoin, Ethereum, and solid projects with utility can be part of a diversified portfolio. But 99% of the hype coins, the meme coins, the pump and dump tokens, the projects with no roadmap are financial landmines. People lose thousands chasing the next overnight gain. In 2026, the market will punish stupidity faster than ever. If you're tempted by flashy promises of 10 times in a week, remember wealth isn't created overnight. It's created with strategy, patience, and skill. Those who chase scams are always broke. Those who deploy capital intelligently always win. Here's the harsh takeaway. Every dollar you waste on fast fashion, debt, or hype crypto is a dollar that could have been your first $100 invested in a real opportunity. The difference between broke and wealthy isn't luck, it's decisions. And in 2026, the wrong decision isn't just costly. It's fatal for your financial future. Stop buying what loses. Start buying what multiplies. That's the law of money, whether you like it or not. 2026 is not going to wait for you. The market isn't going to hold your hand. Opportunities will appear and vanish faster than ever. And the people who succeed won't be the lucky ones, they'll be the ones who act, the ones who understand leverage, risk, and multiplication, the ones who start with what they have, not what they wish they had. Let me make this painfully clear. Don't listen to the billionaires who forgot what it's like to have nothing. Kevin O'Leary can lecture you about skipping latte all he wants, but he didn't get rich that way. He got rich by deploying capital strategically. And now it's your turn. Your first $100 is more than just money. It's a test. It's a signal. It's the moment you prove to yourself that you can think like the 5%, not the 95%. The choices you make this month will determine whether you're a spectator in the game of wealth or a player. So here's your challenge for 2026. Take your $100, split it according to the blueprint. $40 in your safe base index fund, $30 in tech AI bets shaping the next decade, $30 in self-education that multiplies your skills and earning potential. Deploy it ruthlessly, monitor it, learn from it, compound it, and don't stop there. Momentum is everything. Keep reinvesting, keep learning, keep building. The first $100 is just the beginning of your financial engine. The sooner you start, the faster you create leverage. The longer you wait, the more you fall behind. Here's the simple CTA. Comment start below if you are investing your first $100 this month. Subscribe for weekly 2026 wealth updates. This is your accountability. This is your signal. This is the year you stop watching life happen and start making it happen. 2026 is going to be the year of the smart investor. The year the patient, strategic, and ruthless finally separate from the herd. Start small. Act big. Move fast. And prove to yourself that $100 can be the spark that ignites a fortune.